Nin, thank you for joining Equities.com here at the NASDAQ market site in Times Square. Nin Ventures is a crowdfunded venture capital technology firm. Tell me how you're different from other crowdfunding platforms.
2008 financial meltdown led to a liquidity crisis for entrepreneurs, companies, VCs, and LPs. Fewer IPOs means less exits for VCs, which means no returns for LPs, and as a result, venture funds were on a decline. When venture funds are on a decline, startups don't get funded, lower employment rate, and slow economic growth. So to avoid this, in 2012, the Jobs Act was introduced, which allows entrepreneurs and companies to go out and crowdfund. However, there is a major flaw with that concept. I personally come from an entrepreneurial family, so I can speak on their behalf. Entrepreneurs are a brave bunch of people that are determined to change the way an existing industry functions. On that journey, they need a lot more than just financing. For example, guidance or domain expertise, help with PR and marketing, recruiting, viable exit strategy, oftentimes follow-up financing, which is what crowdfunding portals are not able to support. On the investor side, we exposed investors to a brand new asset class, which they never had any knowledge or expertise to invest in. As we all know, 99% of startups fail. On top of that, low minimum investments like $1,000 don't really give them a say or a board seat on any of the investments they make. NIN.VC, we solved all that problems. We provide diversification, we take board seat on all our investments, we lend the necessary support that an entrepreneur needs to build the company, which is what they would otherwise get at a traditional venture capital fund. However, the catch here is, since we are crowdfunded, investors can enjoy better returns because they are directly investing in our fund with a minimum amount of $100,000 using multiple different options. For example, 401k, defined benefit plan, digital currencies like Bitcoin, Litecoin, Dogecoin, or just a regular checking or savings accounts, which they would otherwise not get access to if they approach a venture capital fund, because they would probably require a bigger check.
So you're providing a lot of access, and you're starting at a lower minimum of $100,000 versus your typical $5 million to invest. Tell us a little bit about the portfolio of companies that are part of your fund.
We invest in Series A and Series B rounds of companies. One of the deals that we're currently involved is in the 3D printing space. So for example, if you currently have a damaged liver and you go to your doctor will put you on an organ recipient list. That recipient list runs about 120,000 people, and it increases at an average of 12% annually. On the other hand, organ recipient list increases at 1 to 2%. About 21 people die every day because they can't find the right organs. What if 3D printing can help save some of those lives? Traditional television viewing has been on a decline for quite some time now. People are spending more time on their personal devices, for example, their phones, their iPads, their computers, and as the consumer behavior patterns are changing, digital TV and on-demand content is gaining popularity. So for example, how is that related to anything that we're doing? Think of it as a disruption to the ad tech industry. So as people are switching from watching more traditional TV to digital TV, ad tech industry is gaining popularity. The current digital ad tech market is about $75 billion, and traditional TV is about $112 billion. As people migrate from watching more digital TV to traditional TV, you will see this $112 billion migrating from traditional TV to digital TV, which is a huge opportunity and disruption for the ad tech industry, and which is why we recently added Mr. Gurbakh Chahal as a board advisor.
Could you tell us a little bit about the types of precautions that your firm takes in a very risky crowd-funded market that still needs a lot of education? How do you differentiate yourself? I know that you've called yourself very risk-averse in the types of companies, and that is something that investors like to hear. Tell us about that.
Since we expose investors to a brand new asset class which they never really had expertise to invest in, the biggest responsibility on our end is to educate them. And we are doing that by being extremely transparent. So we host monthly investor calls. If you go to our social media, like our Facebook, we'll upload everything that happens on a firm on a daily basis. We actually give them a lot more than they need to understand what they're doing. And since we have a diversified portfolio, their investment gets diversified, which otherwise it would not.
That's helpful. And this past year, it seems like there was a lot of noise about crowdfunding. Tell us a little bit about the overall trends that you anticipate for 2017, and seems to still need a lot of education. Tell us about that.
One of the biggest concerns that I have with the crowdfunding industry is we made investments in companies available to everybody, but we haven't made investments in firms like ours made available to non-accredited investors. So currently, if you want to invest in NIN Ventures, you have to be an accredited investor, make more than $200,000 a year, or have a joint income of $300,000, excluding your primary residence. We expose investors to a risky asset class before we expose them to a less risk-averse asset class, which I think doesn't really make sense.
Lastly, I want to ask you, as a female CEO and as an entrepreneur yourself, tell us a little bit about your background. There's still so many stats out there that highlight how difficult it is for female leaders to raise capital. Tell us about your experience.
I'm very proud of what Team NIN.VC has achieved in the past few years, and I would say thank you to my team that does not believe in any kind of gender bias and believes in woman empowerment.